And we're back.
Frankie,
Maddie.
happy New Year.
Happy New Year, buddy.
Yeah, you as well.
Thanks
Good to be
for
back in the
sitting
studio.
down. Yeah. Always looking forward to our chats.
Fireside talks
we
here.
are -1 today.
Yeah.
Rob's out, kicking butt and taking names, doing things.
You guys got a lot of important stuff going on. A lot of listings. Our stat guy's not here, but we'll do the best we can.
That's right. No stat guy, so I'm going to try to fill in and see if I can handle it. But
Okay.
and we're talking a lot of stats today.
Let's do it.
Today we're kicking it off the new year with the hot topic of 2026 rates.
Yes. Not the Eagles.
No more talking about that.
Let's
sorry, Eagles fans.
Yeah, let's do it. Let's lift the hood. Let's do this. Let's jump in and let's get this out of the way of where this is probably going to go. So let's what do you have?
So I know it's the hot topic. I know everybody's talking about the big deal as 2026 got started, and it was rates are below 6%.
Mm-hmm.
Oh my God, 5.99.
5.99.999.
All the craze is coming.
Yep.
So I really wanted to break that down.
Let's do it.
So having, my mortgage celebrity, Matthew Wieder, on board for this talk, I felt made the most sense.
So, and by the way, when it did drop to 5.99999, that was for like 3 hours. So, yes. So
it was great for content.
Oh, it's fantastic. So so here we go. So forecasting as we get into 2026, we do have some stats on those. So Frank, Mortgage Bankers Association, what are they through the end of 2026? They're saying
they're predicting rates actually may go up a little, about the same than what they're technically at right now.
Correct.
They're saying 6.4%.
Correct. This is through this is where we're sitting here December 31st of the end of the year.
Right.
So they're going through now. Also, Fannie Mae, Freddie Mac, those are our big entities. Fannie Mae, they're saying somewhere around 5.9 is where we'll be sitting at the end of the year. So that's what they have. Yep, similar, around the same. And then Freddie Mac.
A little more aggressive.
Mm-hmm.
They're giving a range, though. They're saying could be down 5.5, but also maybe somewhere up to 6.4%.
Okay, resonates.
So they're being a little more broad.
Yes, so they're just going to, we're somewhere in there.
Yeah.
So overall, we're not seeing 4.2.
No, it's not. It's not drastic. I know a lot of the conversations I keep hearing, the things that people are talking about is, again, we've touched on this before.
Mm-hmm.
Oh, I'm going to wait because rates are coming down. Rates are going to be 5 or under 5.
Yes.
Forecasts are not looking like that's going to be happening this year.
Yep.
So again, making this real, talking about the numbers, trying to show people what it really means and how much of a difference does that even make for them.
Correct.
With the rates coming down and dealing with the other aspects we've talked about before of a chaotic market and things that will come with the lower rates.
I'd feel for where you sit in your seat and doing what I do, having this talk and clearing the air. You know what? If they drop to 5.1, great. Then all these numbers are lower, but I just don't see it. So hoping, wishing, praying that something happened that's probably not. There's so many things that are going on your side of the track with real estate negotiations, inventory that are much more front and forward than the rate talk and hoping and wishing. So right now, by the way, the rates right now is averaging like 6.1, 6.2.
Right.
We dropped to 5.99999, back to 6.2. Just depends on the day between the two. Between that two, I did want to, let's just say, just so number wise, let's go with $350,000 and $500,000 as like a loan amount per se.
Two good hot points.
Somewhere.
More first-time home buyer and then more average, somewhere in the middle, maybe the first move up.
Yes.
Potentially price-wise. But I think good price points to kind of tap at here.
So if 350, more of the affordable price point they're going to be looking at. Somewhere at, let's say, 6.5. Your interest rate, principal and interest only, is going to be somewhere around
taxes and insurance vary, right? So
keep that off. You're right. Good point. $2,200 a month, somewhere in there.
Yep.
5.875, like the best they might be seeing and going through, a little over $2,000, like $2,070 a month.
Yeah, so you're talking $150 difference a month.
That's it.
Principal and interest.
That's
not a drastic change.
That is correct. And then we also had the $500,000 price point in there too.
$500K price point. Same thing, principal and interest only. Let's focus on that because we're talking about the mortgage.
Yep.
6.5%, reasonable rate, about $3,160 on the payment, $3,160.
Okay.
So if you see that drop, if you see the aggressive rate of 5.875, if it gets there, it's only dropping to $29.57. So again, about $200 a month difference.
Correct.
Not a significant change. And I think that's tricky because I don't think that's what the consumer's anticipating.
No.
I think they're envisioning $600, $700, maybe $800 difference, right? They're like, it's a 30-year out. Why is it so little? That's the factor of rates, and that's why there's so much information out there. And no one's focusing on that part of it. What is the actual difference? What's actually changing for me if I'm getting the better rate, or if I'm thinking about refinancing, right? If I'm sitting at the 6.5% rate and I'm like, oh, is now the time to refinance?
Yeah.
No, not for that change in your payment.
It's not going to be any of all the closing costs. You have everything going through. And I always resonate in going through with it of just my last trip to Costco. One trip in 30 days, and I'll go multiple times, not to jump in the market for let's split the difference, $170 difference a month. And I get long term, I understand that, but you're buying an asset, an appreciating asset that's going to be making you money. Not to jump in there and only have it more bid. Inventory is not coming. We're not having inventory through the roof.
Right.
So as we go through like the remaining part of this year, I think a good thing with clients is for the rate aspect on the purchases. Guys, it's not a huge difference.
Yep.
It's not going to be. It wasn't. The Fed cut rates 3 times, and we saw rates kind of dip down. Really don't see. The last time they cut, the rates did nothing.
Right.
They didn't move at all.
No, and everyone just assumes it's going to be unilateral, right?
Correct.
It's going to happen because the Fed cut a rate. That doesn't always naturally affect the mortgage rates.
Yep.
And I get those calls all the time too.
Yeah.
So it's nice but I like that people are calling.
Absolutely.
I think that's important that, they are reaching out. They're asking these questions. I love having those conversations. I want people to reach out. They're not bothering me. It's not, I'm so sorry I wasted your time. I just have you always call with the questions, right?
Yes.
I think that's important for people to know. But yeah, and right now I think I don't want my clients to be so hyper-focused on making their purchase or making their move because of a rate or a slight rate change.
Yep.
If it makes sense for you, we've said this before, let's make the move, right? It's not that much of a difference.
Yes.
It's not going to bankrupt you likely to just do it now if it's the right house, if it's the right time, if the things fit, and obviously you qualify. But
absolutely.
Now how about on the reverse side? Because I think like we like to talk about thinking outside the box, trying to be creative for clients.
Yeah.
What if the rates do come down? I know there's other ways to take advantage of that. If a client is comfortable with a 6.75% rate, potentially, what does that do for them to actually be able to use a rate increase to help cover costs, things like that?
Yeah, that's a fantastic point, and it's a strategy. This is going to be a year of working with your experienced real estate agent that knows how to structure deals and be smart about the money in terms of that. So a lot of lenders, it's always like the cheapest rate but you got to think of there's other ways too. Like for instance, a lot of people don't know, they know you can do buy downs. So you could pay an extra point or something like that to get a lower rate if that makes financial sense for the long term. You can also go the other way. So if the rates are, say, 6%, you might be only going to be, and having this mortgage for a short period of time, you might be able to go and take a 6.6 or a 6.7 rate. Yeah, that's higher than the market. And yeah, your payment might be $200 more a month, but the lender can then give you a premium credit. On a $350,000, $400,000 house, that could be like $12,000, $13,000 you're getting to cover your closing costs, all your one-time fees, because you know what? You might only have this mortgage for a short period of time.
Right.
Thinking outside of the box. A lot of people sitting on equity, selling other properties, short-term things. Don't just get stuck on things. Think differently.
Yeah, I love that. I mean, I think that's a real creative way to look at where rate changes can be an advantage as well. It's not just about that payment coming down or more affordability with what you're buying, I have plenty of clients that are conservative with what they want to buy, right? They're not pushing a budget. So they could use it the reverse way to say, listen, I can get X amount covered, or listen, this is the house I want, and it's multiple offers. So now I got to get creative with what can I do to make my offer look appealing. Now, if I've got an extra $13,000, I can throw towards, offering certain fees covered by the buyer and off the seller's plate, that's a huge advantage too.
Commissions,
not
transfer
from your
taxes.
cash.
Yep.
There's so many different things that you can do with a 13, 12, 13, 10, whatever.
That's a lot of money.
That much money. It's huge.
Yep. And your closing costs generally in Pennsylvania are going to run you 4 to 5% of the sales price. It's a lot more than people think.
Correct.
So that's where, the rates will stay in that box most likely. And again, those rates we quoted earlier, guys, that's Mortgage Bankers Association. They look at stuff like inflation, the Trump administration with asset purchases. They look at all these things. So it's not just us spitballing these. So both sides, buy downs, possibly if you want to get even lower long term, sure, other way, but use it as a tool. But that's where we're going to stay in that realm,
there's not going to be a drastic change.
Yeah.
Right. And there's still potential for refinances down the road. Even if you bump your rate a little bit now to get that cash.
Yep.
The likelihood is rates will eventually come down to that 5-ish number, we think, someday. So if you're sitting on that and you're comfortable, all of a sudden, oh, wow, now I can do a streamlined refi.
Yeah.
Because the rates have come down. Now I'm really in a good position because I saved that cash on those costs. I got the house I wanted, and I'm still going to be in that position to bring that payment down one day when the rates change.
And refinance. So let's just go through. I have a ton of clients refinancing right now, which I do. Just so everyone knows, the magic number is really what you want to get is 1%. If you're at 6, a 7, you want 6. 7.3, 6.3.
Gotcha.
That's why I say that. And this isn't just me. Mortgage lenders you're going to talk to across the board, even if you Google it, that's usually what the rule of thumb is. And the why is because you're going to have some lender's fees, maybe an appraisal, you're going to have title fees. So it's going to cost you a couple grand to do the refi. That 1 point spread generally saves you enough money that you'll, the outlay of cash or rolling it into your new loan, it'll be about 2.5, 3 years that then you'll really start saving, if you follow me. You know what I mean? So anything.
That's where it logically makes sense, depending on where that break-even point is.
Correct.
For the investment, to get that back and then be saving money.
Correct. Yep. That's where right now I have a lot of my clients that were on my monthly refinance update for 3 years now. That's where I told all of them, like, guys, if it was me personally sitting at anything north of a 6.8, you should probably pull the trigger. It's that pigs get fed and hogs get slaughtered situation, because it just takes one or two things. It just takes one or two things. I've seen it before over 20 years that all of a sudden now rates are back up to 6.5 and you missed your window.
Yep.
You could have gotten that perfect opportunity, but we're at the cusp where I don't really see, and nor do all these institutions feel we're going to see a lot less.
And that's the thing, their forecasts are usually somewhat on point, right? It's not like there's going to be some drastic difference to what they're predicting.
No.
So there's not going to be big moves this year.
Correct. And if we're wrong to the low side, fantastic. It's even better.
Absolutely. Let's be conservative with how we're looking at it. But at the same time, this is why I want people to not hesitate with reaching out to us as often as you want. You want updates from us, Matt can put you on a list. We can always be keeping you guys in the forefront if you want to be, in the know, because that's the thing. If there's that little window where maybe they drop more than we think and you're on it, somebody might be able to take advantage of that if they're communicating with us.
Yes.
So those conversations are so important. We try to follow up and check in as much as we can, but don't ever hesitate to say what's happening. Don't wait till you hear it in the news. Don't, just stay on top of it with us or ask for consistent updates, and that's what we'll do. Absolutely.
It's something that you need to have a team. Like we talked about a couple weeks ago. It's all about having your team into this year. So I think it was good to kind of clear the air. There are the rates if they fluctuate from there, but more content coming through for the remaining part of this year of a lot more strategy.
Yep.
But
and market's still strong here. I just want to hit on that real quick because dealing with it right now. There's still limited inventory, still having multiple offer situations. So this strategy, these things we're talking about can come into play, with buyers that want to figure out how to make their offer stand out in a multiple offer situation. Some of those things we just talked about can be a factor depending on the cash you have to put out there.
Absolutely. That's the most crucial part. So, I think that's awesome info that we have going through.
Rates.
Big
topic.
We lit the back up in green talking about the money today.
money.
But any, like Frank said, any questions, guys, that's why we're here. They're keeping it real, really diving into things of what they mean. But that's really where we are as we get through the rest of this year. And we're having more coming through with strategies, insight, local, hear what's going on in the Lehigh Valley, where we live, where you guys live. Let's get going.
Keep a pulse on the areas outside the valley too. Bucks, Montgomery County, Berks, up into the Poconos and Stroudsburg, guys. We got pulses on all that. So reach out. We're here. Partners in Property, me and Rob, Mortgage Celebrities, Matty Boy, we're here for you.
Yeah, I seen his odometer. Trust me, he drives. So give him a call.
Yep.
See you guys.
All right, take care.